we will have the presentation, The Evolution of Payment Methods, given by Leonardo Escobar, Head of Sales LATAM, ACI Worldwide. Let me tell you that Leonardo has over 10 years of experience in the industry of payments, and his strategic vision by being involved in payments through LATAM, the Middle East, Africa, Asia, and the Pacific, provides a global vision of the industry which is evolving in different ways all over the world. So that's why we really appreciate you joining us, Leonardo. You have the floor.
Thank you, Vicky, and good afternoon, everyone. It's a pleasure to be here, and I thank Prosa for the invitation to this event. I've been learning a lot from these sessions, and I hope I can share with all of you something regarding means of payment. Today, as Vicky has mentioned, I'm going to talk about the evolution of means of payment. And I'd like to start by saying that usually when we think of payments, when we think of payment trends, we think that these are things that are going to happen 5 or even 10 years from now. The fact is that in payments and in almost all industries, when we talk about the future, it's much closer to us than what we realize. These are things that are happening already in other markets. They simply haven't become widespread in all the world or the regions where we live. But with the opportunity that I've had to work with the markets in the Middle East, Asia, Africa over the last 4 years, I've been able to see some of these trends that are developing, which I think will reach us in Latin America. Some have already arrived, others will come later. But we're going to talk a little bit about those trends. These are things that are already happening in some places, markets where maybe they're 1, 3, or 5 years ahead of us in a specific market, and how that's going to affect us. So if you like, let's get started. So what we're going to talk about today is 4 main pillars that drive the evolution of means of payments. First of all, we have expectations of the users. All the things that we as card holders, account holders, expect and demand of payments in our day-to-day operations. The second pillar is regulation. Central banks, regulatory agencies, trying to implement a certain type of regulation, coming out with new laws and so on. Then we have the new technology, how it's evolving and how it allows us to do things that 5 or 10 years ago we couldn't do. And lastly, we have the 4th pillar, which is the new competitors who have new technology and new regulations. There are new players also in the ecosystem of means of payment. So we'll be looking at the 4 pillars, and lastly, we'll be looking at the business impact that they have on the things that are happening based on these 4 pillars. So let's start with the first one. User expectations. Here we have several things that are happening. We're talking about things that we expect or demand, and the first and most important thing is to pay and be paid, what we call access to funds. That means that when I'm carrying out an activity, I want to be able to pay quickly, simply, without any hindrances or frictions. The example I think that best applies to all of this situation with COVID and what we've all been going through is a business on social networks. There's been a resurgence of business on social networks supporting the independent economy and all this matter of unemployment. And when we're trying to buy something through Facebook or some other social network, what we want is to be able to do it immediately. We don't wait to have to give bank numbers, get somebody else's account numbers, and so on. We want to do something quickly through electronic means. And here's where we have new digital options coming up in tablet infrastructure, which facilitate this. The second trend within this block of user expectations is the flexible means of payment. We're talking basically about interoperability. I want to be able to pay you with one application, and you can receive the payment with a different application. There should be a link between these areas, like the serving as a connector. But we wouldn't expect to have payer and payee both needing to use the same application. Over time, we will see how this interoperability gradually gives way to a more flexible means of payment. Here the example would be this very same example of the social networks. If I receive through a certain means of payment, I don't need to know what means of payment you're using. The third is interpersonalization that is occurring and being expected by the market. On the one hand, we have control. I want to be able to personalize the control of my payment instruments. I want to be able to say whether I'm going to use my credit card on the internet or not, or whether I'm going to use it outside of my country or for a certain type of transaction. And when those limits are applied or withdrawn, I want it to be done immediately. I don't want it to be something that I need to hear about first and it's going to then be in effect 24 hours later and so on. Today, there are fabulous tools available that allow us to do this immediately. This has to do with control management. Then on the other hand, we have personalization as far as service and loyalty. We've seen already in industries that become faster even than means of payment. For example, the entertainment industry of Netflix, where we see suggested series based on what we've watched in the past. In the same way, what would happen if banks or financial entities could offer things based on your behavior? And it's not just the traditional campaigns that we're used to, but for example, the personalization, for example, of my wanting to save up so that a year from now I can take vacations, and people could say, do you want to round off all your transactions with an increment of 1% based on the consumption of your transactions that you've done in the past? If you wanted to agree to this rounding, you could reach your savings goal within 12 months, for example. The one that maybe I like most is interpersonalization. It's something that I experienced with public services when I lived in the United States a few years ago. And basically, in public service companies, in some more than others, you could personalize your experience. So, for example, I was in Miami, and Miami is very hot. So the electric bill is high because of the use of electrical cooling, but payments can be averaged out so that all payments are the same in the year. The public service adapted to the person, not to the property. One could pay in advance if he was going to be out of town on a trip or something without being able to make monthly payments. All this personalization of experience as to whether I want to pay at the beginning of the month or at the end of the month or in several payments or one payment. I can do the payment manually or be notified, or I can get a request for payment and I can approve it or authorize it with just a message. All of these things are being expected. Every cardholder or account holder or user, consumer has certain preferences that are different from the others, and he expects to have something adapted to his particular needs. The fourth point would be that it should be easy and fast. Here, speaking of simplicity and speed, what matters is the immersion in the payment experience within the experience itself of consumption. The clear example, which has been referred to a lot, is Uber, where in the past you had to consume the service of a taxi, and at the end of your ride, you would ask how much it cost, and then you would pay. Today, you just get in and out, and the payment agreement was implicit in the experience. In the same way, in business, Amazon did it first with Amazon Gold, where you go in and you leave without any cashiers. Then Walmart, 7-Eleven, and others have begun to do it around the world. That immersion of the act of payment, where it's implicit within the activity, that's also something that is occurring. What we need to see is the cases of use, how it's incorporated. First, we didn't imagine it would happen with Uber, but it did. Then it happened in supermarkets and so on. And what are the different cases of use in the different services? And lastly, digital experience, which is basically starting, continuing, and finishing its unichannel. It could be from home through any digital instrument without having to be present always. An interesting example here, different from the pandemic, would be, for example, that a person goes out to the movies with his friends and finds out that he left his wallet at home. And, well, we have a password that would allow us to get cash from any ATM machine. And this would give us these trends that we have from the perspective of the user or consumer, being the first of the 4 blocks we're going to talk about. The second pillar that we have in the evolution of payments is regulation, where we have regulators, governments, central banks. Open banking is the most impacting case in the payment industry in recent years. And basically, it's providing access to financial information of account holders to companies that have authorization for this. It is based on the principle that the account holder is the owner of the information and not the financial entity. In Mexico, 2018, this trend began in Latin America, and it has evolved in different countries based on new regulations and laws that are expanding this topic of open banking. A very good example here is that of fintech that can consolidate the financial information of an account holder with different accounts in various banks in one online platform, where I can go in and see how my cards are, how my accounts are from several different banks on one platform, thanks to this access. The second trend as far as regulatory issues is immediate payments. Mexico also started early on with Spade and Cody, and it has continued there have been in the region new launches. The best known one is Pixel in Brazil, but also 3.0 transfers in Argentina or TTT in Peru, and cases such as UPI in India. These are famous. The entire issue of payments changes the ecosystem in payment means, because it's generally a mechanism that has no instruments and is highly regulated by intermediation of rates, which would be the third point. How it's restricted by regulation, the fees that can be applied to certain channels for immediate payment. And this is having a great importance because of the financial inclusion that brings in new players into the payment system. As the fourth point, we would have the message of ISO 20022, which is bringing in enriched information in the message itself, which will allow us to create new use cases and new lines of access to participants. And we have all the other particularities that come up in each country and each market. So that would be the second pillar that drives the evolution of means of payment. The third pillar for this evolution would be the new technology. And here we would begin with the topic of APIs and new services, which are changing the way that we can approach the problems of the past in a much more agile and open manner. Microservices, understood as construction in small units of what in the past were monolithic applications which did a lot of everything. Today, they can be separated in microservices, which allow for greater agility at the time of consuming those services or functionalities by different participants or by different applications. And usually through APIs, all of this is application, that architecture and structure of the availability of microservices through specific rules so that they can be consumed, and encouraging fintechs and other entities to come in and consume these services in a safe and secure manner, in a standardized way, and very quickly. The second point would be the public cloud. All the customers that I've had an opportunity to work with over the last 4 years, where I've been working globally in payment consulting services, they're all in some manner exploring the public cloud, and most of them even with different suppliers. So the possibilities that open up here for facilitating and expediting the whole matter of tests and voice creation of environments, even the consumption of certain infrastructures and other topics, is something that is really fabulous, and it enables many additional services different from those that traditionally are done. This third point would be artificial intelligence. This is maybe the solution to what for many years we were talking about as big data and what was going to be done with big data. Well, now the answer practically is artificial intelligence, where machines can take that information in real time, analyze the implications that they have, and make better decisions to provide a better experience to users. Here, very closely linked to interpersonalization, there are businesses that are devoted to use the data from open banking to personalize customer experience, proposing uh, topics of savings, topics of financial behavior based on habits seen in the transactions done by the cardholders. This, of course, has an application in fraud prevention, where we see that with immediate payments and with the speed that things are happening, that's expected that fraud and anti-fraud measures will be taken in a much more agile manner. And lastly, we would have the fourth point, which is SaaS, PaaS, where we have the software as a service, platform as a service, banking as a service, which is this new technology, the services, the public clouds, regulation that allows us to consume or use technology in different manners. Very interesting. And enabling also the entry to get many different services in a faster, simpler way and provide a better experience for users. And that would be the third point that we're talking about here as far as the evolution of means of payment, which is the new technology. The fourth pillar and last pillar in this evolution is new competitors. We mentioned at the beginning of the session that it's inevitable that with so much new technology and so much new regulation, with expectations of the users of having more in functionality, of course, there would be new players in this ecosystem of payment means. Fintechs are the main ones, which are very successful due to the topic of open banking. They're coming in to present new cases for use, new access to the information to provide a different service for users. And it's generating a very interesting disruption and very enriching for all of us as consumers and users. And banks also in countries around the world with this new offering of business of credit cards, usually things aimed at new account holders or young people. This has been very successful. They've had amazing growth in our region and in each of our countries. Globalization would be a third point here. We begin to see a convergence of markets where digital banks and traditional banks are operating, and the same with intermediaries and fintechs. So we see the arrival at the market of participants from other markets where traditionally competitors were limited to one country. The third point would be, the fourth would be new roles. Within the players, the traditional players that there are, customers, processors, intermediaries, banks, issuers, they need to begin to rethink where they want to go and where they want to be in the next 5 years. Will they be banks that get into the world of synergy? Will they be issuers that will get into other services? It's normal that in the face of all these changes, there should be some entities that will find that their lines of revenue change and they need to rethink their strategy and their position, their vision as to how they are going to serve their customers. And that would be the fourth pillar. Well, considering these four pillars, user expectations, regulations, new technology, and new competitors, it's normal that there would be an impact on the business. And that impact is becoming evident in several ways. First of all, there's a disruption in market share. It's not that new competitors are coming in and taking away market share from the existing participants. The size of the pie is growing because new people are coming in. There's greater financial inclusion through immediate payments. And the next point would be the fight for the customer entry, where we have customers that are seeking this experience. They want these new cases of use to be able to have a payment experience with fewer restrictions. And we have these fintechs and different players changing what they do and creating new experiences. So that loyalty will be key because ultimately it's the customer who needs to decide on which service he will use. Differentiation as a key factor to win that loyalty. The new opportunities for access. These are opportunities and risks because ultimately, if in immediate payments they're giving you money or cash in real time to the person who's the payee, maybe the business, as it makes advanced payments, won't really have such an advantage. So many entities need to begin to ask themselves which are their sources of income. And lastly, the removal of intermediaries. Basically, we need to be a part of the payment system by contributing some value. What is the value? What is my synergy? What is the experience that I'm contributing to the user? So with that, I would wrap up the topic of the evolution of means of payment. I trust you've heard some interesting topics to explore, and I'm open to any future inquiries, and we can make time now for questions and answers. We have some questions here that are coming in. We are sort of short on time, so I'll try to be brief. Thank you for these questions. The first one that I see is what role is played by financial education in the light of all of this progress? Definitely, it has a key role when financial inclusion comes in with the government guidelines regarding central structures and the APIs and so on, giving access to the digital media. It's important for these to be available through financial products and so on. But I would say that it's always important to consider adoption that is generated by usability. And the example that I would give is Apple. A child knows how to use an iPad or an iPhone 5 minutes after he's had it in his hand. Fintechs, the different APIs and applications, this helps financial services to be consumed in a much faster and more friendly way. That's what will help a lot. Technology enables usability. The second question that I have here, and I'm sorry for going along so fast, what is the difference between interoperability and open banking? Interoperability is the ability of two processes or platforms or systems to talk to each other in an efficient way. Open banking is the understanding that banking information and the management of funds, it belongs to the user and not the bank, but access can be given to others on their behalf. Another question is, how decisive will infrastructure and the technology of the players be in the industry as a differentiator to improve experience and productivity? I would say that it's absolutely decisive. Just a few months ago, I was in Michigan with the manufacturer of automobiles, worldwide manufacturer, and we were talking about how to improve the experience of their users who buy automobiles and how to internalize possibilities of payment within that industry. And it was clear that in the automotive world, for example, a few years ago, technology was maybe 10% of the cost of putting a car together. Today, it's over 60% of the cost. So for a car manufacturer, today, 60% of the cost of the car is technology. So I think that technology is key. And that's what will allow you to do things much more simply. However, it's not sufficient. Technology provides options for many different things, but you have to understand the market, the use cases, and what consumers want. So it's understanding of the business as well as the enabling technology. Another question I have is, in order to improve omnichannel retailing, is it better to create strategic partnerships with a technology supplier or to create one's own infrastructure in the cloud with many suppliers? I think that there isn't one right answer here. I think each participant in the financial sector or payment sector, whether it's a fintech or an intermediary or a processing bank or whatever, needs to decide on his own process. As with many other things, there are cycles to be followed. So there are companies that will try to concentrate most of their technology in one strategic supplier, and they will begin to uh, wish for those benefits of having those services in a more as a separate manner. And since we all think that the grass is greener on the other side of the fence, they'll begin to disaggregate those services in several suppliers, and then they'll begin to long for the simplicity of having one supplier alone. So these are cycles that purchasing departments, for example, go through, and technology areas experience the same thing. There are cycles that we have to go through and respect. Well, I, of course, think that today both paths are quite legitimate, and they have their pros and cons, and each company will have to decide how to assess this. Well, there are a few more questions, but we're out of time, I guess. So I'll leave it at that, and I remain available for offline contacts.
Thank you so much, Leonardo Escobar. Thank you for your time and for the knowledge. There's no question that the evolution of payment methods was a relevant topic expected by all of our audience.